All right. Hey guys, thanks for tuning in. So during the week, I'm going to make a video that would be considered a little more educational. In today's video, I'm going to show you where to put the Fibonacci retracement tool, where to put the Fibonacci projection tool, which is the mainstay of Elliott wave. When you're creating a chart, you got to use the Fib projection tool. This is the basis of Elliott wave, really, is seeing the projections of where price might be headed based on the current structure. And we use Fibonacci heavily in our work. Okay, so the other thing is I want you to stick around to the end of this video because I'm going to reveal something that has a profound effect on your trading and also our society and global markets in general. Just wait till the end. I'm going to bring it all back together and show you something that might be considered provocative, but it's just Elliott wave. It's just the way Fibonacci works. And it's something that Ralph Nelson Elliott was able to see back in the 1930s. No kidding. Stick around to the end to watch that. But for now, let's dive into the chart. We're going to look at the SPX and we're going to get into the weeds with some Fibonacci projection tool work. Okay. So here we go. All right. So here's the SPX. I'm going to pick it up from the last meaningful low, call it October 2022. So a year and a half ago. And anytime you're making an Elliott wave chart, you want to pick a meaningful swing low. In this case, I'm not going to go all the way back to the COVID low. I'm just picking it up from this wave 4. And we have the rest of the price wave of the SPX that takes us up to today. So the first thing we're going to do is measure this. Here's the first wave I see, the swing low here. Here's a swing high, another low, high, low. So the first thing I'm going to do, now we are on a 4-hour chart, which I think is a very good time frame to look for the top level stuff. In today's video, I'm not going to be drilling down into the lower degrees. I'm only going to cover this degree and a couple of smaller degrees from this degree. And there'll be another video about degrees and what that means. But just to keep it very simple, when Elliott wave is talking about degrees, it's kind of the same way somebody who trades candle work talks about the time frames. Like you have 4-hour candles, and inside of a 4-hour candle, you're going to have 8 30-minute candles or so, and then you can keep breaking it down. You're going to see different patterns inside of the 4-hour candle depending on which time frame you're looking at. Well, in Elliott wave, we call the different degrees is the different perspective, similar to the way a time frame plays out with candles. Elliott wave refers to these different uh, either zoomed in really tight or zoomed out really far. We call those degrees, different degrees, to get a different perspective. All right, so let's get back to the chart. And so the first thing I'm going to do is eyeball this and look for 5 waves up. And I do, without measuring anything, I kind of see 1, 2, 3, 4, 5. And I also, I want to measure this. So if you've never measured for Fibonacci projections, I'm in TradingView. You want to grab the tool that is called Trend-Based Fib Extension. But whatever broker, whatever platform you are using, you want to look for something related to Fib extension. And once you select that tool, it's going to give you 3 clicks. 3 clicks. You're going to put the tool on 3 different price points and click, and that is what's going to give you your projection. Now, I'm using the magnet because in Elliott wave, it's very important to get the price exactly on the ultimate low or the ultimate high of whatever you're measuring. So in this case, I'm going to call that the low, and I'm going to put the tool here for what I think is wave 1, and then I'm going to put the tool here for what I think is wave 2. I'm actually going to zoom in just a little bit more so we can see exactly what we're looking at. Now, what I do see already is this could be 5 waves up, 5 waves making it to the 1618, which is the golden ratio, the golden mean, whatever you want to call this. This is a well-known, famous, honestly, Fibonacci number, 1.618. It comes into our work all the time as Elliott wave practitioners. So this can absolutely be 5 up just at first glance because it did come up to the 1618. What that actually means is the length of this wave 1 compared to the length of the entire structure. The entire from the bottom of wave 2, this entire structure is 1.618 the length of wave 1. That's why it's called a projection, because really what it is an extension. We're measuring the extension from the bottom of wave 2 to the top of the structure. And in this case, it comes out right at 1618. And then wouldn't you know, look, it reversed from there. So you're already learning something. If you see a 1618 and you've measured it properly, it's very likely you're going to get some kind of a pullback for sure. So anyway, 1, 2, 3, 4, 5 is what I see that's acceptable based on that measurement. Now, the next measurement I would take is a fib retracement tool. And in this case, what I want to do is measure this wave 4. Now, if you don't know anything about Elliott wave, I will just tell you there's one immutable, unchangeable rule. And that means for something to be a 5-wave structure, impulse, 5-wave structure, wave 4 cannot encroach upon the top of wave 2. It cannot come into the price territory. Wave 4 cannot come into the price territory of the top of wave 1. You can clearly see that this did come into the price territory of wave 1, which just means instead of it being an impulse, it is considered a diagonal, which has different characteristics, different tendencies, different guidelines. So again, as I said at the beginning of my video, I'm not going to get in the weeds here of all the rules and subtleties of Elliott wave and the nuances, but I am just going to keep it moving, okay? So we have one up that is acceptable as a diagonal. So now we want to track the retrace. So normally what we see in a retrace for a wave 2, typically it's going to come down somewhere between the 382 and the 618. So to measure for that, and by the way, I'm not going to be painstakingly put the tool using the magnet on every single low and top because it would take too long. But when I am trading, I absolutely do that. So in this case, I'm just going to eyeball it. And actually, I have a lot of templates saved because I'm constantly measuring stuff all day long. So I don't want to always have to reset my fib tool to whatever I'm measuring for. So I have templates. So in this case, all I'm doing, I'm just dragging this over, you see, because all I'm really interested in is where did this low strike? And what I can see is it was between the 50% and the 618, which, you know, is a reasonable area for a wave 2 to terminate. So then you have a move up and a higher low. But we consider structure of price when we are talking about Elliott wave. So while I'm looking at this, I'm not going to talk you through everything that I'm thinking about. I'll just give you sort of an overview. You know, in order for this to be another impulse, it would have to be 5 waves. And what I can tell you is this, if this is a 1-2, this is not high enough to be a 5-wave structure. I can just tell that. Like, if I'm not going to waste time putting the fib tool on there, but I promise you, if you measure this as a 1-2, this maybe got above the 100 fib. Probably not. It's close. In fact, it might measure, I wouldn't be surprised if it measures very much on the 100, which has me thinking it's an ABC because there isn't enough room. If this is a 1 down here, like a 1, 2, 3, 4, 5, it's still out of whack because the 5 would be too long if that's the case. And this doesn't look like a wave 1 because this is very overlapping. So if anything, this is a 3-wave move. So in other words, I don't believe this is an impulse higher. I'm going to, and let's see, this down move. I could actually, let's see here. I'm looking at, basically what I'm looking at is the structure of these moves. 1, 2. Now this could be 1. Well, this would still be overlapping, but I kind of like this as 5 waves, but this wave 4 did overlap that, which is acceptable. But the way this is playing out, I mean, the way this looks to me, I would consider this 5 waves. Now, as I say, I'm just giving you a quick, very quick cruise through how you use the fib tools and take measurements. So I'm not actually going to measure this. But what I know is that 5-wave moves typically are either an impulse, and they can show up as a standard wave 1, wave 3, or wave 5. Now, we just had what we're going to consider wave 1. So I'm looking for a wave 2, but this looks like 5 waves down. But I know that that could be a C wave. So and this whole thing looks like 3 waves to me. 1, 2, 3. And even though it made a higher low and it made a higher high, this is a 5-wave structure. So this doesn't fit with the fact that price is making higher highs, higher lows, and it keeps going higher if you have 5 waves down. So this is very likely a C wave, which means this correction is a 3-wave move, and I'm going to call it an ABC. Now, the C wave is really the clue here, because that is the main thing that would make sense to me, that you would have a 5-wave move going opposite the direction of the primary trend, which would only be part of a corrective wave. And the only corrective waves that can be 5 waves is either an A or a C wave for the moment. There's more to it down the road, but this video is keeping it very simple. So as a 3-wave correction, this, I believe, is the C wave. And this degree is inside of the degree of this ABC. So I'm going to lower the degree of that 5-wave move back to subminuet. And listen, degrees, not critical. What is critical is how you measure it and what you're calling it. But getting the degrees right for now, not critical. So this is a 1, 2. Even though this is a higher low than this, I'm counting this. This is a perfectly good, what's called a flat. There are many different types of 3-wave corrections. This is a type of flat. I'm not going to get into the weeds anymore. But what I am going to do now is I want to measure. I'm going to use a measuring tool, because now that we have what I think is a 1, 2 in place, now we're going to put the fib tool on here. That is the holy grail of Elliott wave. You want to find what you think is a 1, 2. You're going to grab the fib extension tool. You're going to put it on the last swing low. You're going to put it on the top of what you think is wave 1. And then you're going to put it at the bottom, the low of what you think is wave 2. Now, this fib tool, I also have templates. So you may want to pause the video. I have a template called standard pinball right here. You might want to pause the video, create these 4 settings on your fib tool, and save it as standard pinball. We call it Fibonacci pinball, something I learned from the good folks at ElliottWaveTrader.net, which is where I learned this. And I have another one called pinball extensions. In this case, I already know this wave is extended, so I'm going to use the Fibonacci pinball extension settings. These are variable. You can see I have a lot of other settings, but this is my default template to save time. So the next step is, I don't want to measure this because I'm looking at this stuff, right? We already know the price wave kept going. So what I want to do is, now that I know where I'm putting wave 2 right there, I want to drag this all the way over so that we can see where does price hit against these other Fibonacci levels. So when I drag the price over, the magnet's going to make it go crazy. So I'm going to turn off the magnet. Okay, I'm going to go back into the tool because I want to go to the coordinates, and I want to copy that low 3808. I'm going to copy it, because when I drag it over, it is going to wreck. It's not going to remember that price point where I have it. Now let me just make this quicker. So I know this is going to take us all the way up to like July, where we are now. So what I'm going to do is I'm dragging this tool all the way over kind of to where we are now. And then I'm going to go back to the coordinates, and I'm going to paste in the number that we just copied, so I know it's accurate. All right, so now this is where I'm going to start using the labels. So this is the bottom of wave 4. So I'm looking for a 5-wave structure because wave 5 should be composed of 5 waves. And we initially are thinking that's wave 1. This is wave 2. To me, eyeballing it, this looks like wave 3. This looks like wave 4. We're going to get to wave 5 later. Now I need to alter the degree because the current 5-wave structure that I'm now counting is 1 degree higher than that one, this wave 4. So I need to adjust the degree. And so the intermediate degree is the main one. So this is going to be 1 degree lower than the intermediate degree. And I'm going to make them white. I used to like to use different colors for the different degrees, just so visually I can kind of keep track. So 1, 2. Now a wave 3 can absolutely target either the 1, 2, 3, 6 or the 1, 3, 8, 2 fib. What you can see, isn't this interesting? First thing I see is wave 3 has reversed right around the 1, 2, 3, 6. The 1, 3, 8, 2 is up a little higher. It didn't make it to there. Wouldn't it be interesting if this little mini pullback caught support at the 1, 3, 8, 2? Just for grins, I'm going to look. Okay, a little bit shy of that. So this, to me, measures just fine as a wave 3. And we should also see 5 waves inside of a wave 3, which just very on a cursory glance, because I've been doing this 5 years, I've crossed over my 10,000 hours. I can kind of see, oh, that's I want the labels, not the measurement. This is, I could see this as a 1, 2, 3, 4, 5. It's also possible this could be a 1, 2 with a flat, kind of like that. Now I could get into the weeds and really measure the nano structure there to figure that out. But in this case, I am not going to do that. Just in the spirit of time, I'm just going to keep it moving. And I'm going to use a different color for that degree. Okay, so this is, it's either 1, 2 right here, like this, or it's 1, 2 a little higher. To my way of thinking, it doesn't necessarily matter because this did top out where I would expect a wave 3, and it's close enough for that to be 5 waves. Now, normally, if I were really trading this, I would spend the time to take the measurements, but for this example, I'm just going to keep it moving. So that's 3 up. Now, the 4 down, wave 4 cannot encroach upon the price territory of wave 1. Now, I already looked at this. It's within pennies. It did not overlap. It did not overlap. So as of this moment, we have a legit 1, 2, 3, 4 in terms of it not overlapping. But let's measure the wave 4, because when you're measuring for a wave 4, the first thing I do is grab the fib retracement tool. I'm not going to use a magnet today, but normally I would use the magnet. I'm going to just pull this up at the top of where wave 3 is, drag it over, because remember, I'm only interested in looking at exactly where that wave, what I'm calling wave 4, I just want to see exactly where it hits the fibs. All right, I just wanted to move that. I'm just getting that as close to the top as I can. And now, because I like to keep my charts clean, I'm going to drag this over and put it back at the bottom of wave 2. And now I'm going to my template, because I have a template saved for wave 4. All the way at the bottom, boom. I always like to use blue for wave 4s. Now, this has extended quite far, but there is no overlap. So the primary number one immutable rule is wave 4. If it's a 5-wave impulse, wave 4 cannot get in the price wave territory of wave 1. It did not by pennies, but this did retrace 618. Wave 4, we measure it from the bottom of wave 2. So keep this in mind. When you're measuring for a wave 4, you're measuring from the bottom of wave 2 to the top of wave 3. And then you're looking for where does wave 4 strike the fibs. In this case, it came to the 618, which is very deep for a wave 4, but it did not overlap. So now here's the fly in the ointment. Okay. We all know market is wildly extended. I mean, you don't need me to tell you that, but looking at this Elliott wave count, you can tell the market is wildly extended. This is all good structure right up to here. And then starting last fall, going all the way through, all the way into the spring, we only have one pullback to right here. Normally, this is where wave 5 should terminate. And I know all the folks started screaming from the mountaintops that it's terminating, but it has extended again. This thing is just wildly extended, and it even poked above the 300 fib. So right now, what that means is this price is 300% the length of the wave 1. Normally, a standard fib target would be 200. So this is a whole nother 100% on top of what would be standard. And I can also tell this is just straight vertical. There's no meaningful pullbacks in here except for this one. So there's no 1-2, there's no 3-4. This can't be 3-4 without a 1-2. This kind of has some structure. So I could almost see this as some kind of 1-2, but I can even tell glancing this is out of proportion. So I'm going to consider this the best way to describe this is a blow off top. And because the whole thing could be considered a diagonal, I'm going to consider this an ABC for the 5th wave. Now, I'm putting this label here, not because I think that's where it's going to terminate, but because that is the next fib up. So if it doesn't keep coming down from here, the next logical Fibonacci level is up here at, can you believe I'm even saying this? 5,700, 5,780. Okay, so this is how you look at Elliott wave through the lens of Fibonacci. This is how you take the measurements. There's so much more to it, but this video is already long enough. So let me get to the real crazy part of Elliott wave. So remember I was talking about degrees and how the degrees are similar to the way a candle trader looks at time frame. Now I'm going to put this 5 over here, not because I think price, okay, the analysis is done in this video. I'm not talking about price. This is just information over here, okay? This wave 5 that we are in right now, the wave 4 of that is from March 2023. This wave 5 is inside of a much larger degree wave 5, which bounced off of the COVID low, wave 2 from June 2020. This is where the crazy part is. The next degree wave 5 from Elliott wave, the wave 2 for that goes back to somewhere in the 40s after World War II. That is the bull market we have been in ever since then. And all of these 5th waves have a wave 3 in it, which if you're an Elliott wave guy, is the longest, strongest wave usually. So think of all the ginormous wave 3s that are inside of each one of these wave 5s. This wave 5, the wave 2, went all the way back to just after World War II. And this wave 3, this is a massive wave 3 that we are finishing. Wave 5 of wave 5 of wave 5 of wave 5 of this massive wave 3 that began in 1929. This is just the way Elliott wave works. Here's the crazy part. The gentleman that Elliott wave is named after, Ralph Nelson Elliott, projected actually to slightly below the levels we're at now. He projected these levels to be struck. Now we've gone over his time frame, but Elliott wave, everyone that practices it knows Elliott wave isn't predicting time, it's predicting structure and potential reversal points. So whenever this wave, which is already wildly extended, whenever this wave terminates, there is a distinct possibility that we are terminating this degree wave 3 from the 1929 low, which is wave 2. And what comes after wave 3 is a wave 4. And the wave 4 that goes with this wave 3 that we might be now topping in projects roughly to below 2,000 SPX. What? Yeah, below 2,000 SPX. And could take based on, there is some proportions that Elliott wave deals with timing. So the very rough timing of this wave 4 is 12 to 14 years. Some say 10 to 13, whatever. It's more than a decade. So imagine having a decade of mostly downside action starting whenever this wild extension terminates. It could have already terminated. It could have terminated here, but it didn't. It might come. Who knows where it's going to project to? But these fibs are the best clues you can get using a methodology that has been predicting tops and bottoms going back. I'm out of fibs going back a very, very long time. So actually, I see the 4618 is way up there, but so 6,000 is a fib. 3618. There are certain fibs that are more likely to get struck than others. So that's why I use very specific particular fibs. So, are we going to make it to 6,000? I have no idea. But what I can tell you is once this thing finally gives us an initiation move lower and starts breaking these levels, just be aware that it is possible. Now, I'm not saying it's happening, this year even. Who knows when it's going to happen? But just be aware that once we break these meaningful lows, especially this wave four, which is from last October, it's real common sense. That is breaking structure. That is breaking down structure. So I just want you to be aware that our society, our markets could have a very, very different look to them once this current wave finally tops out. Maybe it's going to make it through the fall. Maybe it's going to be red October. I have no idea. I'm not interested in predicting things. I always say Elliott wave, it's parameters over predictions. So whenever this next wave tops, whenever we have a strong initiation move to the downside, something that looks impulsive, something that breaks support I'm talking the big support levels like the most recent wave 4 and then getting below the wave 2 that we just showed you. Those are very important levels that might indicate major top in place. But here's the beauty of Elliott wave. Once we do get an initiation move lower, we're going to constantly measure. That's what I do. I'm constantly measuring and projecting, and it's the nature of the waves that will help inform as to whether or not it's impulsively going down or correctively going lower. These are fantastic and valuable tools. So if you like what you're getting, you want to learn more, keep in mind, on the weekends, usually on Sunday, I post more analysis, just showing levels and parameters on a few different instruments. That's on Sundays. On Wednesday, my plan is to produce a video similar to this where I'm showing a little bit more of how to. This video is a little different because I'm actually showing you potential topping areas for the SPX and what is to come from the view of Elliott wave based on all these degrees stacked up the way they are. 12 to 14-year bear market ahead, whether it's this year or next year, I don't know. Scary times. But guess what? As long as you have parameters, you're going to be safe. Use proper risk management. If you need help with your psychology, you see the ticker scrolling across the bottom of this video. Join us inside a private trading club called The Professor Trades, run by master scalper day trader Armando. He is amazing. He's mastered his own mindset. He has a gift for teaching the mindset to others. That's how I ended up there. I love the place. It's unbelievably economic. You can be in there for less than $1 a day, which is to me remarkable for the amount of value you get. There's 300 members in there. We're all sharing different things. My Elliott wave charts are in there. Come join us in the room. And certainly subscribe if you like what you're getting to this video, because I will be keeping you informed and updated as we go along. All right. Thank you so much for watching. Hopefully I'll see you in Armando's room. The links to the club are in the description of this video. So go through, take a click, get a trial, try it out for a couple weeks. He does run free trials. I'm not sure if he has one right now, but at less than $1 a day, it's just a month at a time, no contracts at all. Come check us out. All right. Thanks for watching. See you there. Bye-bye.